Hello everybody, welcome back to the channel. Today I'm doing my weekly options portfolio review, and this is where I go over all the trades I made for the week. I talk about why I put them on, or why I closed them, and then I also show you my progress overall. In this video, I'm also going to talk about the wheel strategy briefly, and show you my Roth account, where I've been running the wheel strategy for the last year, and you can see what the results look like. So first off, here are my daily close snapshots. You can see pretty good week, a lot of green days. Basically, my only positions that were losing or going against me for the most part were AT&T. I have 20 leaps on them, and they were dropping like 50 cents on Monday and Tuesday. And then Visa was going down at the beginning of the week, but it made that back up at the end of the week. So those are where most of my swings were coming from for this week. Progress review, 1015. You can see I'm up to 172,800. So the account's up almost $4,000. Now I did make a long overdue deposit, so I deposited $3,000. So only up 958 from investment gains this week, but all I care about is the net lick value, and that's up, so that's pretty cool. All right, so this week's trades. On Monday and Tuesday, I didn't even log into my account. On Wednesday, I logged in and did a lot of profit taking. First off, Campbell Soup, a $4 put, and I was able to close for 25 cents credit, and, take that $90 gain. Rocket, I saw that Rocket shot up to 1580, and I was able to exit this position with a gain, even though it was in the money. So I decided to jump on that because I only had 3 days left on this contract and didn't want to worry about that Vega move. Like if Rocket went down to 15, locking in more losses. So I did go ahead and close this. In hindsight, I think Rocket closed above 16 at expiration, so I could have saved, or I could have made another $450 had I just let it expire. But I decided to take the risk off and just lock in that small gain, so that's pretty cool. Pins, I decided to close this one down because it was 5 cents to close it, so why not lock it in case anything happened on Thursday and Friday with the market on a macro level. Virgin Galactic, at this time it was trading at $24. I decided to lock this in at 5 cents in case anything happened, like maybe a Virgin Galactic would dip for some reason. This trade, I meant to close all 5 contracts. I got a partial fill, but I thought the whole thing got closed. So the following day, I did close the other 4 contracts and was able to make an extra $4 by doing that. But just goes to tell you, like, pay attention to your fills. Make sure your entire order gets filled and not just a partial fill. So I was surprised when I logged into a notification. You have an option expiring this week, and I thought I closed them all already. So pretty interesting. Just make sure that you get a full fill when you have multiple contracts working. That's just a warning just to keep in there. Intel, another $50 put here. This is on a video. Actually, I think a lot of these are on the top 3 options play for the week. I was able to close this one for 4 cents, lock in a gain. And then I decided to sell a Tesla bear call. Tesla was trading at 808 when I put this on. I was able to collect 170 per contract. It's a $10 wide spread, so my max loss per contract is $1,000. Put on 3, so my max loss is $3,000 minus the premium received, obviously. And I sold this because VIX was up. I figured I might be able to make a win from IV Crush, as well as the fact that it's $100 so basically above the current price. I know Tesla's been moving up the rest of the week, so we'll have to see. I still got a long ways before Tesla attempts to breach this. I also deposited $3,000 in the account. This was long overdue. I haven't been depositing money for a while now. And what's neat about Interactive Brokers is they sped up their process. This used to take like a week and a half to hit the account. Now it's there within the hour, so that's pretty cool. We talked about this one. Thursday, I decided to sell a Clorox 155 put. I currently have a 160 put that expires next week, and it's at the 160 strike. And I was able to sell this one a lot safer at 150 and collect a pretty juicy premium right there. So decided to put that on, let that one start working on theta, let that decay, making some money. Intel, I've been having some good success with Intel recently. I was able to sell the 4750 put for 55 cents credit, which is not much less than I got when I sold the 50 put, but I'm also further away from the money, so I think VIX was still a little elevated when I sold this put. So I think that's going to be a nice one. I did put on 3 contracts. And then Friday, Virgin Galactic was at $21 at open, so I decided to sell some 0 DTE 20 puts on Virgin Galactic with the idea If I get assigned, I'll turn around and sell covered calls on it. So I was aggressive, sold at the money basically, collected 17 cents. And then I ended up closing those out because I decided, you know what, don't really want to have the shares. Closed them for about 11 cents per contract, locking in a $41 gain. Had I waited till the last 5 minutes of the market, this contract was worth 1 cent, so could have made that whole $170 had I just waited, but whatever. I locked in $41 on a trade that probably wasn't the best idea in the world. I also sold the November 19th 18 put. I sold 5 contracts, collected a nice premium. Again, Virgin Galactic below 20 would be awesome to be assigned at, so I think this is just easy money. The thing I don't like about this trade is that I already have some Virgin Galactic puts that expire on November 19th, so it's the same date of expiration. I like to tend to spread those out by a couple of weeks. But when I was looking at the premium for Virgin Galactic on different weeks, this just seemed like the sweet spot for this play. VST, this was a lead call that I put on a while back. My price target for VST was 20 and then get out of the leap. VST got up to $20, so here I am getting out. Small gain, not a huge return for how long I had this on, but I mean, a gain is a gain, can't complain. This was one that was on one of my top 3 weekly plays, and here it is. I closed it out for 20 cents and locked in a $150 gain on a pretty safe play here. I think O is actually above $70 right now. It's probably safe to just let this one sit there and expire worthless. But I figured, why wait 35 days to collect $60 when I could put that money towards other positions or wait for the market to give me another opportunity. So I decided to lock it in, free up that buying power, and move on to the next trade. NIO, this was another spread that I talked about in one of my top 3 videos. As I would close this for a 5-cent debit and lock in a $47 gain. I think this was like a 2-week hold even. It wasn't even that long of a hold, so that's pretty cool. CRSR, Frank on our Discord server was talking about how he sold the 2250 put. And then I took a look at the chart, and I'm a bit more bullish than he was and decided to sell an in the money put because this was at 2480 when I put this on. Basically, as long as this stays above 23.23, I should get a gain. And so ideally it'd be finishing above 25 by expiration. I think we'll see a spike sometime before we get to November 19th because it seems to gravitate towards 25 anyway, or 26. But if it stays above 24, it'd be some nice gains from the extrinsic value going away in theta. So I think this would be a good play, even though I sold this in the money. We'll just have to wait 40 days and find out. Disney, this was a put spread that I had on, and I just decided to close it off. It was at 50% profit. I just decided to lock it in. And so for the week, I made a little over $1,000, so that's pretty cool. Not gonna complain about that. Here's my log book where you can see where I enter these positions. I had someone comment on my Virgin Galactic put that I closed. When was it ever worth 80 cents? Well, I sold this back at the beginning of September. This is the beauty of selling like 45 days contracts. You can get some high premiums, just let this sit there and cook, never look at it, and then just take the money when it expires. And because you're going longer dated contracts, you can tend to get further away from the strike. So when I sold this, it was actually trading at 25. And when I closed this, Virgin Galactic was actually at 24. So it actually moved towards my strike price. But it was just so long in time that the theta just ate away at this contract. I was going to close it. And yeah, that's the beauty of selling these longer dated contracts. You just set it and forget it. Yeah, on the right here, you can see how long I held these contracts. If I do like a same day trade, I'll put in days held to 0.1 so that my calculations don't go crazy. But other than that, you see most of these were longer dated contracts that I closed out. Current positions, I'm seeing a lot more green recently than I have in the past, so that's pretty cool. You can see here's the Clorox play that I was talking about before. It expires next week. And then here's the new one that's further out in time by about a month. Looks like V is back up again. Must have had like a $7 run today, which puts me back to neutral. This is one that I'm just let this one sit, and basically when this gets up to 240, this order should trigger and just give me a $1,000 gain automatically. So that's a neat play with leaps. So the reel is a fantastic strategy, but I think when most people think of this, They picture buying 100 shares of the stock and then selling covered calls repeatedly. And then if they get exercised and they lose those shares, they buy 100 shares and they start selling covered calls again. Like, that's one part of the wheel. And actually, where that is right here. All they're doing is running right here. Where I'd like to be on the wheel is in this version here. So you can start the wheel off by selling a cash secure put. If it expires out of the money, you made money, and you just repeat that process. If it didn't finish out of the money, and the stock is above break even, then you take the shares, you sell them, you still made money from the premium, and you're back to this area. If it's not above break even, that's when you go in here and you sell covered calls until you get out of this little loop here. Once you get exercised, you can start back over. This is the way I like to run the wheel. My ideal situation is I just stay in this area here. And in my Roth IRA, I've been exclusively running the wheel, and I've yet to be assigned. I've been selling it mostly on stocks that I would like to own that have a dividend. So a majority of the plays have actually been on Realty Income, something like at the money strikes or one strike below. And basically, I've just been selling cash secure puts, take that premium, and then repeat the process over and over and over again. I've yet to go down to this part of the wheel in my Roth account. And the results of that so far, in 1 year, I've gained 48.5%. And this is just me selling a put, collecting the premium, letting it expire, and repeating that process. I've not been assigned or really tested in this account yet, so that's pretty cool. If you want to look at the year to date, I think the return for this year to date is about 38%. But I have not put any deposits in during this time, so this is all gains from just running the wheel, and that's pretty awesome. Like, that's a really awesome strategy. Finally, here's a snapshot of my options account. The Netlick 172,800. Maintenance is pretty low, so I have room to buy stuff if the market provides an opportunity. And good luck next week, guys.